This $400 million vessel.
$218 million. Hunts get this big, you start to hear some lottery horror stories about
the worst day on Wall Street since the crash of 1987.
The role of money in human behavior is complex. The pursuit of it drives innovation and competition.
Apple's new iPhone has a new bottom. It's getting a more versatile port.
Ferrari says it's launching its first fully electric vehicle late
In the final quarter of 2023, BYD outsold Tesla in battery-only cars.
Making giant Nvidia broke the $3 trillion valuation mark, overtaking Apple.
But it can also lead to stress and ethical dilemmas.
FTX founder Sam Bankman-Fried was sentenced to 25 years in federal prison.
Mid-fashion to get more investors' money and pretending to pay off the old people with new people's money. And now $50 billion in assets are wiped out, gone.
You can't carry on a fraud for decades and decades and ruin so many lives and then turn around and say, oh, I'm sorry.
The man we are going to discuss in this video, he has beaten the system. This man didn't just get rich, he got filthy rich, and all that by just cloning Warren Buffett.
I am what you might call a shameless cloner.
So why no one talks about this or teaches this in schools? Is the system trying to keep us in dark? Today, you're going to learn something really valuable from a man you probably never heard of. This is Mohnish Pabrai, and his net worth is $1.8 billion. Pabrai's commitment to cloning raises an array of provocative questions. Is originality overrated? Instead of struggling to innovate, should most of us focus our energy on replicating what smarter and wiser people have already figured out? If cloning is such a powerful strategy for success, why don't more people use it? Are there dangers to cloning? And how can we benefit from it while also being true to ourselves? Let's go in depth to find out how Mohnish turned his $1 million into $1 billion. Born in India in 1964 and raised in a family of entrepreneurs. His father was an entrepreneur with an uncanny knack for founding companies that went bankrupt. Mohnish saw his parents lose everything and multiple times. Just like his father, Mohnish was an incorrigible optimist. You would be amazed to know, Pabrai performed poorly at school, once placing 62nd in a class of 65. He had low self-esteem, and then came the turning point of his life. Sometimes, even a smallest incident or a word of advice from someone can impact our lives in a meaningful way. Something like that happened to Mohnish too. In 9th grade, Mohnish was given an IQ test. He went to the guy who administered the test and said, "What does the result mean?" The guy said, "Your IQ is at 180. You're just not applying yourself." It was like whipping a horse and it starts. Sometimes people have to be told they have something in them. Mohnish went to Clemson University, and that's where he discovered stock market.
70 record closing highs so far for the Dow.
Blasting through a ceiling
in a record-setting IPO.
He took an investing class and averaged 106% going into the final. The professor tried convincing him to switch his major from computer engineering to finance. He ignored the advice. At the time, his perspective was that all the people in finance are dumbasses. After college, Mohnish took a job at Telebus. Then in 1990, he launched a technology consulting company, Transtech, bankrolling with $70,000 in credit card debt and $30,000 from his 401k. Most people couldn't stomach that level of risk, but he's always had a gambling streak. Transtech thrived, ultimately employing 160 people, and Pabrai set aside $1 million in savings by 1994. For the first time, he had a war chest to invest. That year, he bought one up on a Wall Street by Peter Lynch while killing the time in Heathrow Airport. It was there that he first read about Buffett. He was astonished to learn that Berkshire Hathaway's chairman and CEO had racked up investments of 31% annually over 44 years, starting at the age of 20. thanks to the magic of compounding. This meant that an investment of $1 in 1950 would have grown to $144,523 by 1994. Pabrai reached a logical conclusion. Buffett was not a dumbass. As a boy, Pabrai had heard a tale about an Indian who supposedly invented chess. He presented his game to the king, who offered him a reward. The game inventor requested 1 grain of rice for the first square of his chessboard, 2 grains for second square, 4 for the third, and so on, all the way to the 64th square. The king, who was arithmetically challenged, owed over 18 quintillion grains of rice, now worth around $300 trillion. Remembering this story, Pabrai instantly realized that Buffett had mastered the game of compounding. Pabrai started thinking what if he did the same, and figured out how Buffett picked stocks and could mimic his winning approach. That's when started the 30-year game to turn 1 million into $1 billion. From year 2000 to 2018, $100,000 invested with Pabrai's hedge fund would have turned into $1,826,500. That's 1,204% return versus 159% for the S&P 500 index. Pabrai's approach to the challenge of becoming a billionaire holds important lessons for us all, not just an investor, but in every area of life. He didn't attempt to reinvent the wheel by, say, devising a new algorithm to exploit subtle prices anomalies in the markets. Instead, he identified the most skillful player of this particular game, analyzed why he was so successful, then copied his approach with scrupulous attention to details. Pabrai calls this process cloning. Pabrai's knowledge came entirely from reading in his early days. He had limitless sources to learn from about Buffett and his friend Charlie Munger, decades of letters to Berkshire's shareholders. Pabrai was convinced that Buffett's style of investing was so simple and powerful. But when he looked at other money managers, it was like looking at an entire set of physicists who don't believe in gravity. Whatever you believe in, gravity or not, it's still going to pull you down. Let's say there were 2 self-serve gas stations on opposite sides of the street. One prospers by providing high-quality service, such as cleaning windshields for free. The other does the bare minimum. What happens? The customer inevitably drives to the better gas station. This error amazed Pabrai, since nothing could have been easier than simply to copy the superior strategy sitting in a plain view. Humans have something weird in their DNA, which prohibits them from adopting good ideas. Pabrai says, when you see someone doing something smart, force yourself to adopt it. This sounds obvious, even trite, but this one habit has played a decisive role in his success. Given that Buffett had averaged 31% a year, Pabrai naively assumed that it shouldn't be hard to average 26% for himself. At that rate, his 1 million would double every 3 years and hit 1 billion in 30 years. He even got a license plate that reads this. Even if he missed by a mile and averaged 16% a year, his 1 million would turn into $85.85 million in 30 years. Such is the glory of compounding. Mohnish had no MBA from a fancy school such as Wharton or Columbia, no qualification as a certified financial analyst, no experience on Wall Street. But Pabrai expected Buffett's methodology to give him an edge over fools who failed to follow the Sage of Omaha. Pabrai followed 3 of Warren Buffett's rules to his heart. Rule 1. Stock is just not a piece of paper. Whenever you buy a stock, you're buying a portion of an ongoing business with an underlying value, not just a piece of paper for speculators to trade. Rule 2. Market is a voting machine, not a weighing machine. which means stock prices frequently fail to reflect the true value of these businesses. Rule 3. Margin of safety. You should buy a stock only when it's selling for much less than your conservative estimate of its worth. It's called margin of safety. Pabrai understood that market is prone to irrational mood swings, and keeping yourself detached from the madness would be the way to the wealth. As Buffett has said, you don't have to swing at everything. You can wait for your pitch. The problem when you're a money manager is that your fans keep yelling, "Swing, you bum." Buffett, who once showed him the blank pages of his little black diary. Pabrai keeps his calendar virtually empty so he can spend most of his time reading and studying companies. On a typical day at the office, he schedules a grand total of 0 meetings and 0 phone calls. There is a quote from philosopher Blaise Pascal. All of humanity's problems stem from man's ability to sit quietly in a room alone. Year 2000. Pabrai made $1.5 million from his first stock pick, which was a tiny Indian technology company called Satyam Computers, which he bought in 1995. This stock rose 140 times in 5 years. Later, the stock dropped 80% when the tech bubble bursted. Through luck and smarts, Pabrai turned his $1 million into $10 million in less than 5 years. He wrote Warren Buffett a letter offering him to work for him for free. Warren Buffett replied, "I've given a lot of thought to the optimal use of my time, and I simply do best operating myself." So Pabrai pursued Plan B. Several of his friends benefited from his stock tips, and they wanted him to manage their money. From 1956 to 1969, Buffett had managed investment partnership with spectacular success. So what do you think Pabrai did? In 1999, he launched an investment partnership with $900,000 from 8 other people and $100,000 of his own. A year or so later, he sold his technology consulting company Transtech for $6 million so he could focus exclusively on investing. Buffett charged no annual management fee but collected a performance fee of 25% of any profits over an annual hurdle of 6%. If he made a return of 6% or less, he didn't get paid a dime. Pabrai adopted the same fee structure. Pabrai describes this structure as heads I win, tails you lose. Pabrai also says, if you learn basically from other people, you don't have to get too many ideas on your own. Following Buffett's lead, Pabrai constructed an unusually concentrated portfolio. He figured that 10 stocks would give him all the diversification he needed. When you're buying so few stocks, you can afford to be choosy. Pabrai glances at hundreds of stocks and rapidly rejects almost all of them, often in less than a minute. Buffett is a master of this practice of high-speed sifting. What he's looking for is a reason to say no, and as soon as he finds that, he's done. As Buffett said, the difference between successful people and really successful people is that really successful people say no to almost everything. Like Buffett, Pabrai doesn't build Excel sheets either, which could give him an illusion that he can precisely predict the future. He wants an investment that's so cheap that it's a no-brainer. He has a simple criteria. If something is not going to double in a short period of time, like 2 or 3 years, he's not interested. After reading about Mohnish, I found myself thinking more and more about the power of cloning and how to use it in my own life. It makes me question what winning habits are out in the open that I should clone, and who should I clone? For example, people in business can clone the greatest businessman ever lived. There has been billions of people who ever lived before us, and I'm sure you will definitely find someone in your field who you can clone. The goal here isn't to become a slavish follower of someone else's ideas. It's often smarter to take the spirit of a principle and adapt it to suit our own priorities.